I want to talk about how some entrepreneurs become multi-millionaires in such a short amount of time. Now, what I've found is that most businesses, they chase revenue and profits. But the truly wealthy entrepreneurs, they chase something much, much bigger. They chase enterprise value. They chase business valuation. Now, most business owners I come across only focus on profitability because that is all they know. Drive revenue, try to improve profitability. Drive revenue, try to improve profitability. But what if I told you that if you are able to design your business in a way that, yes, it's bringing in profitability, but you could invest back some of that profitability into your business to then create a larger valuation tomorrow. And so most people, let's just say they have $300,000 in profit that they're making each year. What they'll do is they'll continue to try and drive that and improve that every single year. They'll maintain their overheads. They won't invest back into the business. And yes, they're getting a nice cash flow within the business every single year. But if I said to you now, what if you grew that revenue, or if you grew the profitability so that in 2 years' time, your revenue is higher, and you may have a business that valuation is driven by a revenue multiple, or you might have a business that has a valuation driven on EBIT multiple. And so what if I told you that if you invested and figured out where the key levers are to increase your enterprise value, that you could add a significant amount of value to your enterprise within a few years' time, meaning that if you ever sold it, not only would you get some sort of profitability, but you would also be able to get a very large payout when you do ultimately sell it. Now, what does that look like? So say if you spend $10 to get a customer, that customer brings you, let's say, $30 in profit every single year, right? And so that's your EBITDA. If your business trades at a 5 times EBITDA, then you spending that extra $10 in ads adds $300 to your company's value. So think about it that way. Yes, your profitability may be a little bit lower in the short term, but overall, you're building enterprise value. Over time, it compounds. Over time, you now have a cash flow positive business that drives high profitability, but has also brought you back a bigger valuation. Similar to property, businesses can increase in terms of their capital value. And most people, all they look at is the rent that's coming in. So have a look at how you can do both. How can you improve profitability or maybe decrease profitability in the short term to ultimately drive a much bigger enterprise value in the longer term? Now, most business owners don't know how to do this. So the first step is to basically figure out, well, how is my business valued in the first instance? A lot of businesses will be valued on EBIT times multiple, but there are so many other valuation methods dependent on the industry and the type of business that you're in. So get a business valuation now, understand the levers, understand the drivers, and then reinvest your profitability into initiatives that will not only drive profit, but also enterprise value.